for the fourth inaugural BNC weekly series. I'd like to bring forth into the spotlight something that has been growing amongst the crypto community: legacy markets, legacy trades, metals, currencies. For the most part, gold, silver, dollar, yen have always been tied together with crypto because BTC, for many people, represents an exit from the current currency situation anywhere around the world. So it only makes sense that as legacy moves in markets are beginning to dominate every market, that crypto is no different, specifically BTC. So I want to talk about correlations. I want to talk about VIX today. This will probably be a weekly topic review of these things because they're worth talking about. It's worth talking about that the DXY almost has 100% negative correlation with BTC. So if you're a trader and you're not paying attention to DXY, dollar currency index, you're kind of missing some vital information when you're making trading decisions or when you're establishing your bias for directionality. It doesn't hurt. You don't want information overload. You don't want analysis paralysis. But at the very least, you want to be able to collect in the information and then decide from there, parse through it, what you do or don't like. So I talk about the VIX a lot. I don't know who started talking about it. I don't know when, if it was years ago, but wow, some things I see on Twitter and it's just like, that is so correct. I need that in my life. I need to envelop that in my trading toolbox and just continually track it over time, because it is scarily accurate when predicting tops and bottoms, mainly bottoms for BTC specifically, but volatility in general. So the VIX represents a legacy market volatility index, also referred to as a fear index. If the VIX spikes, everything else usually tumbles. That's my layman's understanding. Crypto is included in that. As you can see, here's the VIX here. Historically, traditionally, VIX has spiked to 25, 30, 40 maximum. Even in 2009, it didn't necessarily spike to where it spiked in March this year. So with Corona, it's a whole new ballgame in the VIX department. And we're still trending the VIX above where historically was the high at around 26 to 30. There's been arguments made that the VIX won't decline until we have a cure for Corona or some viable response that we don't currently have, which may or may not be true, but it's worth paying attention to. Because once the VIX settles down, BTC should be more bullish than it is now, certainly. Spikes in the VIX are risk off, and right now BTC is a risk on asset. And ETH is wrapped in with that because really ETH at the end of the day follows BTC for the most part. Sometimes it has a mind of its own, sometimes it doesn't. But all this stuff lines up pretty closely with BTC, ETH, the VIX. If we talk about correlations, here's the SPX rolling 30-day correlation. You can see how significantly we've been trending. So again, if you're not watching the SPX, not necessarily on a day-to-day basis, but you're catching alerts here or there. Like today, for an example, US Open, there's this headline, Square buys $50 million worth of BTC. Everyone correlates that with, oh, this is why the BTC went up today. For me, I'm looking at the other stuff in Legacy and thinking, Legacy opened positive today, SPX, NASDAQ. That's why BTC popped up. Sure, maybe the NASDAQ news or the Square news was included with that, but the power of the Legacy move to the upside is significant for crypto across the board. You can see NASDAQ down here. Correlation's less so on the 30-day rolling for BTC, but ETH has correlated over 50% for most of the year since January with NASDAQ. Both ETH and NASDAQ have skyrocketed since January, since March. So there's no surprise there, really. Some people like to think of BTC as the NASDAQ or as the SPX and ETH as the NASDAQ. So there you go. So for me, how I read these on a day-to-day basis is how much are we correlated over time, relatively big picture. VIX correlation looks extremely high as far as directionality is concerned, as with SPX, as with NASDAQ. So you can't not pay attention to US legacy markets. You just can't. You can't size up a position and say to yourself, we're going to go the opposite of legacy when we've trended so hard with legacy over the past 9 months. It's just silly. Here's something even more amazing. Here's the weekly rolling 30-week correlation with the DXY, the US dollar index. Almost a maximum negative correlation, meaning if DXY goes up, BTC goes in the opposite direction or vice versa. Gold, almost the most positive rolling 30-week correlation it's ever had with BTC currently. So you can't not pay attention to both of those as well, because again, if you're on the wrong side of the trade, you're going to get bulldozed by an inverted head and shoulders on the Dixie that you may or may not see, or an edge-to-edge trade on the Dixie that you may or may not see to the upside, or a TKC clamp on gold, bearish divergence rather, that suggests mean reversion over bullish continuation. All of which I'm seeing right now. So if anything, that's a bias against bullish continuation for BTC here. BTC would have to break these correlations to move higher. And here's the gold TKC clamp, what I'm talking about here. This is the cloud. This is 1852 104 26 for people who know what that even means for the cloud settings. It's default doubled. It's a legacy market. I won't get into the weeds and explain that further, but those are the settings. And on the weekly chart, there's very clearly a TKC clamp, a disequilibrium in the TK lines here, which projects a mean reversion to the downside, back to the yearly pivot. Overall trend remains bearish. It's above the cloud. I didn't even put the 200-week EMA on here, but it's down at like 1400. So gold was on a tear this year, past 2 years really. And it may need to settle down. It was on such a tear, it exploded above the parabolic upside. We're talking about gold here, something that doesn't move very fast ever. Critical support is down here at 1350, where resistance became support in mid-2019. So gold is basically 100% correlated with BTC, and gold looks like it's going to pull back. It's hard to be mega bullish on BTC right here. That's just my logic. There was also a bearish divergence on volume here, not a bearish divergence on RSI, but a bearish divergence on volume. If this volume can even be trusted, I'm not really sure. If this is paper gold, that's a whole other conversation, but clearly a divergence there as well. So it would not surprise me if BTC stalls a bit as gold returns to the mean. If we look at silver, same thing. I didn't show the correlations, but they're all in the same bucket together. Silver also wants a mean reversion to 20. It had an even more explosive and quick run over the past 9 months since March. Almost completely vertical. So if metals look weak to me, which I think they do, they look weak not in a necessarily overly bearish way, but in a mean reversion way. Much like DeFi, actually. DeFi looks very similar to metals in that it exploded and now it needs to chill out. It needs to relax back at the mean, regather its strength for another push up potentially. And this will take time. So this also doesn't jive with my Q4 analysis for BTC, which is October, November are the best months for BTC to move. That will not correlate with gold and silver right now, because they look like they want to mean revert, like I keep saying. And again, for silver, it had what's familiar to the cloud people as an edge-to-edge trade. You saw this on ETH, you saw this on BTC in 2016. ETH is currently around the $25 or $20 mark, silver equivalent, as far as where it's at in the cloud. But ETH's cloud looks eerily similar. These cloud patterns happen over and over again. So if anything, silver has outperformed ETH, at least seemingly, over the past few months. And then lastly, as far as currencies are concerned, USD-CNY is relatively important as well, but this week I wanted to talk specifically about the DXY, which is the ticker for this one. So this is the daily chart, and it's influenced by a million different things, but in a pure technical sense, in a vacuum, if I saw this chart, I would be ready to buy on high leverage because it had a massive downside over the past 6 months. It had a base, which created a pseudo inverted head and shoulders with a bullish divergence, might I add. So it's got all that. It broke above the neckline, retested the neckline, and now it's getting ready for an edge-to-edge trade with a bullish TK cross. I mean, this can't be any more solidly reversal-y than I could paint if I tried. This looks so good for upside, it's scary, which says to me, if this is 100% negative correlation with BTC, BTC is not going higher. That's what it says to me. Something that could affect the DXY would be a stimulus, which is news event related, US stimulus specifically, which may or may not happen before the election. Something else that could affect DXY is the election. So there's a lot of stuff that could happen between them now and a month from now. But what this wants to do is mean revert back to 96, which wouldn't be bullish for BTC. So I'll talk more about these in the coming weeks up until the election of the century for the US. But until then, I'd watch the VIX, I'd watch SPX, I'd watch NASDAQ, I'd watch XAU USD, and I would be laser pinpointed on this DXY chart, setting alerts at 94. Anything above 94 should be bearish for BTC. And it wouldn't surprise me if there's an immediate reaction if Dixie breaks up to the upside. It also won't surprise me if we get a stimulus and Dixie breaks immediately to 92 or lower. So that's kind of the if this then that decision tree, but this to me is the most important chart in Legacy right now for crypto because it's so heavily impacted BTC over the past 6 months.